Right, let's go. So we're looking at monthly charts here. I thought a good place to start as we are just heading into the new month, or so the first day for the UK anyway. So we've had one, two, three, four, five months of screaming high numbers in the Dow, and surprise, surprise, we are pulling back. So that's the Dow. Let's have a look at the FTSE. Yeah, so the FTSE's had 5 good months, but we paused well, 4 out of 5 good months. We paused in January, and here we are almost at these all-time highs. The all-time high was first made in February last year. So markets are taking a breather. If we do stay up here and punch higher, then we could go another um, 500 pips up here. If we start to fail here, then hold on to your hats. We are divergent. If we look at the weekly chart, um, no, we're not. I take it back. Well, it's certainly not on the RSI. The RSI can be divergent as well as the MACD. Let's put the MACD on. There. Yeah, there's the divergence. If we look at this so from the highs in March last year, we're back up to these highs, but making a lower high in the MACD. Of course, the MACD is still bullish. It's still open here on the weekly chart. It's just that we are obviously at a crucial point. Bear with me 1 minute. Right. So all eyes on this. No reason to sell this at the moment. Let's look at the daily. Yeah, so we actually gapped up on Sunday on the Asian market. We've closed the gap and we've come back into um, support from the 27th. So, I mean, closing like that is obviously somewhat negative, but if we still come back into that support and hold, we could still reach for this 8050, 8050. I mean, so the MACD is very, very high, and the histogram is coming off here, and the RSI is already coming off the highs. So non-farm payroll on Friday. So I am taking some profits off the table in terms of some stocks, and I will start to short if we can push back into these highs up, or if we can pull back into that trend line up here and sell up here with a third touch of this trend line high, then I'll get short and stay short. How if we pull back into this lower trend line and hold, then I'll buy. Let's close higher up down here, close higher, then I'll buy. Otherwise, if we continue to close lower, I will start shorting in a lower level. Um, so I'm looking at this high RSI and this high MACD, thinking that we're very. I wouldn't surprise me to come down to 78.50. So if you wanted to get short into that um, weekend resistance, you know, look for the obvious 8,000. Otherwise, just let this settle down and let's see if we can go back to. Okay, so the FTSE was up there, yeah, Feb 23. I think we can go back to these highs and possibly into higher numbers. So yes, this is shortable, but I think I think we're going to pull back into this support and then go higher. I don't think we're done yet, but I think we are um, potentially seeing some profit taking and potentially seeing this market show signs of giddiness. Well, the American market's already done that, and the American market is 900 pips off of the Asian high, the Sunday open. So yeah, so you can see this trend line high up here. We didn't get there, so we got a lower high into that under that trend line, and here we are 900 pips lower already. But look at what we're doing. This is the 50-day average down here. All we're doing is reconnecting with the 50-day average. We've hardly touched the 50-day average. We've been so bullish. We touched it in the 11th of March and mid-March, and that's the only two occasions we touched the 50-day average on this Dow daily. So we are very bullish. So we shouldn't start getting screaming short until we get under the 50-day average. So the reason why I'm expecting a bounce is because I think all we're doing is just reconnecting. Right, let's get some updates. Let's have a look at the dollar. So dollar this is a daily chart now. So the dollar has been picking up. Markets seem to have woken up to the fact that we're still some way off a rate drop. So the target for the dollar seems to be 105. At the moment, the chart is divergent. This is a lot of resistance down here. If this dollar starts to close lower here, then that could save the market. But if we get a good jobs number on Friday, then I can see this, there's a gap up there at 106.30. So I can see this still picking up and going higher, which is why, in my book, we are seeing a little bit of a profit taking and a run to shelter as the stock markets and the indices have been so high. Okay, quick look at the pound. Just want to keep this nice and short, and I'm already nearly 15 minutes past the hour. Um, so I thought you can see my markings here. I thought the pound was going to bounce off 126. We are back down to 2024 lows, looking like we can come and find 124.80. So let me redraw this. So the resistance zone up there has worked. That the pound has sold from there. We got a lower close on the 11th of March. Push back up there on the 20th. Saw that sold into, and here we are still in wave 3 of this latest move. That is a very tentative close there, looking like we want to come lower. So any push into 126.40 now is potentially shortable with first stop of 124.84. And if this really gets going, as long as we stay under this trend line, then I think we could come all the way down to 120 down here. If I peel back, that's a significant sell. We started to see, got a signal on the 11th of March, another signal on the 20th of March. The highs are selling, so look out for a lower number. Let's look at the pound yen, because the yen has been, you're talking about intervention on the yen. So this is a typical pattern. You break up through a trend line and then you immediately close lower. So 21st of March, that was a reversal signal on the 21st of March on this one. So any pullbacks into that 192, I think are now shortable, because if we now break this trend line support and break the 23 highs, I can see this tumbling right back down. Look at the divergence up here. So as we're making new highs, we're making lower highs in the MACD. Same again, new high, lower high. So that's why I think pullbacks in this one, we're still above the 50-day average. So if you want to short the pound, I would stick with the US dollar, but this one is shortfall as well. All right, so let's move on. Let's look at commodities. Wheat. So we bounced into the 50-day average and pulled back. As long as we don't close under 550, I still think this is good for a push higher. We came out of the top of the channel, now we're popped right back in the channel. So the key is going to be this 540, 550 on this one. I'm very bullish this, but we are still basing. We're under the 50-day average. So that first test of the 50-day average has been faded, which is common. That's the first time we've touched it since 7th of Feb. But as long as we stay above these 23 lows, then I will stick with that one. I will add, if we come down to that 550 hold and the volume picks up. Oil. Oil's sitting right under. Oil's vulnerable here. Some divergence showing through on the MACD histogram. RSI is high. We're underneath this trend line. So we're at the top of the channel. We've almost touched the top of the channel on the oil. If we come back to 80, 81 whole on volume, I would buy. In the meantime, um, I would not enter long this one, but I would buy if we come back, particularly if we come back to 79. I was waiting for, when we were closing lower here on the 21st and 22nd, I was really hoping we'd come back and find 79, but we've not. I would steer clear of oil at the moment, and I would wait and see if we do get a nice clean pullback to 79. If we come back to 79 and hold, I mean, and I would hold that and try and get for 85, 90. So I am overall bullish, still medium to long term bullish on commodities. Gold. Wow. So ever since this pull, but there's a three touch again. So we hit the low of the channel in Feb 14. A screaming high at the moment. We are getting a little too extended. If that dollar keeps perking up, that could put a lot more downward pressure on this one to come and see 2150 again. Certainly no reason to sell it. The near term support is 2200. But a full-blown test closer to 2000 would be nice. There's a top of a channel up here. if I'm wrong, this is, I mean, you've got to be very, very patient. This any market that can hold up to this level could continue to go screaming higher. All I'm doing in suggesting pullback zones, I'm just suggesting areas you could look into if you're not in or gold and you want to be in it. Um, so I wouldn't at this stage, I wouldn't be at all surprised to see 2140 again. Silver is interesting as well. Yeah. So I talked about silver last week extensively, and that is already going back to 26. Um, if you want to get into silver, see if we come and retest 25 again. A retest of 24 would obviously be much nicer. Huge support with 24. Um, if we close above 26 anytime soon, this is going to hit 27 and up to 30 pretty quick. So you may not see this pullback again. There's the 50-day average up there. It's a lot of resistance to that 26. So I'll be very happy to see that come back to 24 if we can't get through here. If we close above 26, then 26 is the level to buy if we close above it and hold it. All right. Let's have a quick look at the other commodities. A very quick look, because I wanted to get straight on. Um, so cocoa is going crazy. Orange juice has come off. Orange juice went crazy. This natural gas is looking good now. This is typically the time of year to buy gas. Um, but 1750. We're up there in 1940. I would love to see that come back into that trend line support down there at 1750, 17. At which point I think that could start to climb up. If you look at last year, yeah, so April last year we were down here at 2050. Um, we bumped along the bottom from May and June and then went on a run into October, November. And it's very, very typical. So if you're patient, if you're interested in natural gas, then wait for that trend line pullback and then sit in that until October, November if you want to benefit. Sorry, interruption there. I don't know quite what happened there. If you didn't hear me, I'm just still in this. I've sat through this pullback. 23 and 25, 26 look next on PAF. The others look very similar. They're all following gold, Hochschild. So I drew the pattern down there at support at 85, 88. Griffin, they're all doing well. They're very, very similar pattern. Let's look at banks. Quick look at the, oh, where are they? There we are. Lloyd's sitting up above. This is very bullish. I mean, I think if the obvious point to get in will be 50. If 50 holds, I think we're going to see 55, 60 on the Lloyd's, and Barclays is 185, still looks higher. Um, Prudential is still not doing it. Standard Chartered. This Hargreaves Lansdowne HL? Must be. Yeah. Looks good. So we got a buy signal there on the 20th of March. We're still under the 50-day average, but we look as if we can clamber back to 8 plus with the potential to go to 859 if this can pick up. As long as we stay above this pattern, as long as we don't close under £7, we should continue higher. Right. Let's look at oil stocks. Hello. Right, Tullow's pushed into resistance. Any pullbacks to 30 now. It looks as if it's capable of going up to 35, 40. Volume, but it is, as long as oil itself doesn't drop, then I think this one is sustainable. So if you're trading tallow, keep a very close eye on oil, obviously. I'm sure you would anyway, but anything else? Anything else? Drax. Drax still looks higher. I think might see 480. That might take us into 550 on Drax. GKP. That volumes look very low on that GKP. Um, look at a couple. Anything you want me to look at? I'll look at healthcare and then I'm going to go. Right. So that's GSK has crashed into a lot of resistance. Very, very, very divergent up there at the highs. It's got a lower high, and now we're coming back into the trend line. But the MACD and the RSI was already divergent up there. Very, very divergent. The main pullback is going to be 16, 15, 16 in that one. If it can get that low, BMI, BMY, I mean, doing all right. Um, Anything you want me to look at? We've not looked at BT. So BT is still having a go. If we start closing underneath 108, it may not do it. If we can hold 110, then we should start to see 120 plus. Yeah, I mean the data coming from the US are in growth and jobs, etc. Has been very, very strong. GDP was higher than expected last week for the quarter. Yeah, so the US is doing very well. Rolls-Royce, beginning to hesitate up there. Vodafone, I've been talking about Vodafone recently. So that has come off 64. Keep an eye on that on 65, 67. It can't get through this trend line, but if we come back to 65, 67 and hold, I think this will clamber back up to 80, 85. All right, I'm going to leave it there unless you shout anything else at me. So, yeah, non-farm payroll. So just to summarize then, um, dollar is really coming to its own as we head into non-farm payroll, which is knocking back the euro and the pound. Oil is just on the underside of that trend line. Gold is sitting up very proudly as well. But indices are really struggling in this open stage of the week. But don't forget, yeah, it's typical in a situation like this, particularly we've got a big number like US jobs at the end of the week, where the markets will get dragged down in the first half of the week. But if you start to see some buying midweek, jump on it. Look at the pullback levels. See if those pullback levels are holding, and jump on them in the middle to second half of the week. If they're holding. All right. Good luck, and thanks for joining me, Griffin. Yeah. Okay. Right. Yeah. The miners have been hard work. Well, UK stocks in general have been very hard work. Yeah. Look at BT flailing around, and Vodafone. Um, yeah. So at the moment, UK stocks are in a better position, looking like they can still punch up a bit further, but sell in May and go away is the old adage, isn't it? So here we are, just getting April underway. So we might get a run into the usual April period. So it's normally a good time to hold. So try not to get shaken out too early at this stage, and let's see if we can run into May as usual. Brilliant. Have a good evening, guys. Thanks a lot. Bye.